The dollar index is starting to pull back, and the question is whether or not this is just a pullback before we push up to the recent highs, or if this is just the start of a kind of fake out to the upside that could turn into more choppiness and indecision for the dollar index. We'll be talking about the dollar relative to its peers. We'll take a look at gold, commodities, as well as indices and currencies all in today's video. Strap in, and if you're new to my videos, make sure to hit that thumbs up button, subscribe. Let's get started. Before we get into the charts, I also wanted to mention that our VIP sale is almost over. We're currently doing 50% off of our VIP memberships using the promo code and link down below in the description. Also, if you click the first link in the description and chat directly with someone on my team, we'll hook you up with an extra 5% off. 55% off is the biggest discount that we do all year long. Inside of the group, you'll get access to our trading chat rooms, trades that we're taking on indices, commodities, FX, and longer term position trades, both from myself and from Frank and Ivan, who are other traders within inside of our community. And you may have also seen them regularly on our live streams. Again, you get notified anytime we take a position, updates, etc. So if you're not already in the group, take advantage. 55% off with the first link in the description by chatting with a member of our team. Now back to the video. All right, so taking a look at the dollar index, I wanted to talk a little bit about this kind of recent price action we've seen. Now, if you'll notice, we had some higher lows come into this market off of, what was a CPI event that came in as expected. And then we had the Fed press conference that kind of reversed course and actually started going higher off of a bit of a hawkish dot plot. What that means is that the Fed essentially still is targeting a rate cut this year, but it's not the 2 that many people were hoping for. It's kind of more in the neighborhood of 1, maybe possibly 2, and also maybe possibly 0. So my point was showing you that is that kind of narrative from the Fed amidst other central banks starting to cut interest rates have made the dollar look relatively attractive recently. That being said, though, I still think that the Fed will cut rates, and that leaves me in a camp of kind of being neutral on the dollar index. From a purely price action standpoint, we've made some impressive pushes higher, and breaking through these highs again looks bullish in the short run. But I'm very curious to see if we do pull back on the dollar index, how we react to this like 105.2 level. Do we bounce from here? So on and so forth. So if you're a currency trader, watch the dollar at that 105.2 level to see how that reacts. And for those of you who are also watching things like gold here, you can see gold is up just slightly. I do have a position on this one off of the daily chart, but let's take a look at the 4-hour chart. So on the 4-hour chart, we did drop pretty hard on Friday, and I did decide to pick up a position here. You can see I was just slightly early, but we're just slightly in the green on this trade so far. What I'd love to see for gold in terms of a price action standpoint is to continue to see this pattern of higher lows and higher highs. I would really like to see us take out those levels. It may take us some time, but really that 2370 level for the bulls to stay the course, I think we need to break through the previous high and make a push through that level. Again, this trade was notified inside of our Discord where I share all of my positions. So again, don't miss out on that VIP sale linked in the description. What I'm personally looking for in order to kind of manage my trade is I'm looking for a breakout, higher lows, so on and so forth, bullish price action to continue in order to really trail a stop and continue to hold on to gold. Now, where am I going to be wrong? And this is an important question for any trader or any investor to ask yourself. What do you do if you are wrong? And in my case here for gold, in my strategy and in my plan here, we have a key level of support around the 2,300 mark on gold. If we come down in this area, I'm fine to hold it through this consolidation period, but what I'm not fine with would be a break through the 2,300 level. If we kind of compromise that idea, I need to get out of the position. And I have a lot of people in the comment section weighing in on whether they think gold is bullish or bearish, and I'd ask for you to do the same. Let me know in the comment section. Do you think I'm going to be right about this trade, or do you think I'll be wrong? And it is possible that I'm wrong. Please understand, I could be very wrong, and in that case, I have a stop loss to protect my trade in this event. Why am I bullish from a technical perspective, even though we're putting in some lower highs? Well, I think lower time frame traders like the 1 hour and the 4 hour chart are going to see a bearish trend, but the higher time frame traders who are looking for longer term continuations of the recent daily chart and weekly chart and monthly chart bullish trends are going to be watching this. Now you may say, well, look, we've got, rejection wicks here, but you also saw rejection wicks here, and you also saw rejection wicks here, and you saw rejection wicks. Let's see if we can find another example. You saw them here, right? You can see them here, some of them work out, but a lot of times when gold is really in an upward trend, it's normal to see, rejection wicks, even though, the predominant trend continues, like right here. So I wouldn't read too much into the price action here. In my opinion, this trend continues to look strong as long as we hold 2,300. If we break 2,300, I need to get out of the trade. Otherwise, staying bullish from here. That is the way I am approaching the gold market. I also wanted to take a quick look at this new PMI data chart just to show you a little bit of context. Why am I bullish on gold? Here is something that is contributing to that. What you'll see is that if you take a look at manufacturing in the United States, we are floating below the 50 level. Remember that growth is above 50 in the PMI data and decline is below 50. So we've been seeing consistent deterioration in terms of, or slowdown in the manufacturing components of the economy. And we can also take a look at some of our peers here. Take a look at the UK. This is slightly positive. And we can also take a look at Europe. Europe is in the negative. So we do see some contraction in the manufacturing side. But what about services sector? Services does look pretty strong in the US. What you can see here is that we did have above 50 by a pretty good margin. So services looks pretty strong. What about, again, take a look at the UK. Services pretty strong. Europe pretty strong as well. And that will be something to watch. I think if you're really going to see economic slowdown, the services PMI giving out, if it were to go under 50, would be a red flag, I think, overall. Meanwhile, retail sales in the US have been pretty disappointing relative to forecasts. These red dots, by the way, are the forecasted levels, and you can see we came in much lower than expected. So the retail side of things, consumer, feeling a little bit of the pinch of these higher prices due to inflation. Meanwhile, next week we will get our next round of NFP, or the next round of jobs data, which will be very interesting to the market. Last time we had a strong data point. Let's see if we get another one, or if we see some deterioration in the labor market. What makes me think there might be deterioration? Well, look at the trend. Unemployment claims have been rising. Job openings in the US have been slowing. Unemployment rate has been rising. So we're seeing some economic data pointing towards a slowdown in the hiring world, and that could impact kind of the scoring here on the Edge Finder. You can see gold is still a very bullish reading, getting a score of +11 when looking at the economic data scoring systems, technical and sentiment. COT data has been pretty positive, and so on and so forth. So I do remain bullish on gold. On TLT is another trade that I have, and I'm watching some other setups here as well, like USD CHF might be one that I watch for on a pullback if we get some dollar strength. Something to watch out for across the board here is the top setups page. What this does, just a high level, if you're not an Edge Finder user already, the Edge Finder, the top setups page allows us to look at all of these different economic data points, which automatically get scored as bullish or bearish for each asset that we watch on the Edge Finder. Now, we do watch way more assets than this, but I filtered out the neutral reading. So you can see we track everything. We've got Bitcoin on here. We've got the S&P 500, dollar, yen, NASDAQ, US 30. We're really watching a lot of different charts. But what I like to do is when I'm looking for setups, I just filter out the neutrals because I don't really care to look at them. I'm only looking at things that have strong readings. So again, this is why I continue to be bullish on gold. And this has been a bullish reading for most of the year, which has led to some really great trades for me on gold. We'll see if that can continue. Meanwhile, stocks are really interesting today. This is, I know that everybody wants to talk about gold and the dollar, but for my stock friends, this is an interesting morning. What we can see here is that if you take a look at the S&P 500, we've got the S&P and the Dow Jones actually up today. Look at the Dow up 0.9%. Meanwhile, the S&P 500 is up 0.22%. And then you've got the NASDAQ. The NASDAQ's in the red by 0.5% almost. And it is all coming down to the same thing that got it here, could take it down in the short run, which is Nvidia. Nvidia is down on the day by 4%. And we can see that again, that quick pullback, just 3 days of selling, has caused the Nvidia chart to go down by 13%. Now, the reason I point this out is that if this continues at the same rate for a couple weeks, Nvidia could very quickly be down 30%. By the way, if you're asking me, Nick, are you bullish on Nvidia? The answer is yes. I would love to own some Nvidia, but I need to wait for a healthy corrective move on this Nvidia chart in order for me to touch it. That is me personally. You do what you want, but for me, I like the idea of like a $95 pullback on Nvidia. That looks really good from a technical perspective. I do think that Nvidia has a lot of room to the upside over the coming years, but in the short run, I think it's a little overbought. That's my personal opinion on it. If it keeps going higher, it keeps going higher. But for me to be interested, I'd need to see a pullback of a little bit more here on the Nvidia weekly chart, really. Again, the S&P 500 being up today is just a testament to how resilient this index is. It is very, very, it's pretty diversified, and other technology companies other than Nvidia can still prop it up, or other companies in general can prop it up despite Nvidia's kind of pullback. We take a look at the sectors here on the day. You can see technology and the semiconductor ETF, they're down. Software is also mildly lower here today. Real estate's flat, but what's up today? Well, let's take a look and filter this. We can see financials are up, which is arguably why the Dow Jones is up today. Same thing with the energy department, right? So Exxon and Chevron, companies like that. Industrials are up, utilities are up, and the comm services sector is up. So again, when you have SMH, XLK down, this is going to hurt the NASDAQ a lot. Meanwhile, some of these more diversified areas are helping out the S&P today. And with the dollar moving lower, we also see yields coming down. Overall, I mean, they're flat today, but the trend has been recently a downside push for yields. And I think that this could be interesting, because if you continue to see yields go down, my position on TLT, which I am long on, could continue to have upside. I do really like TLT as a staple in the portfolio. It's a bit diversification, but it's also a position that I really think has potential if we continue to see the Fed look to cut rates this year. If that becomes more of a story, I think TLT has plenty of room to the upside. I wouldn't be surprised if we make a move back to 100 at some point. So I'm continuing to hold my TLT position. I'm long gold, TLT. I do have some S&P 500 and some, not NASDAQ, but XLK is another position. In fact, let me load up my platform to show you. So here's a list of my current positions, my TLT trade, my gold, and my silver trade. And then VOO and XLK are other positions that I have that I've sold calls against, which have not been the best plays that I've made recently. Selling those calls did cap my upside in a market that kept going higher. But if the stock market rolls over, these calls will be a nice little hedge. If they don't, then I will be called away from my position and take profits on XLK and VOO, both of which have been really good pickups for me in the April sell-off that we saw. So we'll keep an eye on all of that. By the way, if you're looking to use the brokerage that I use, which is WeBull here, I can trade directly on TradingView. It has an awesome platform and so much more great features. If you are not already using WeBull or one of the brokers down below in the description, I just want to mention that if you check them out, there are great sign-up perks. You can get free shares with WeBull, and with other brokerages down there, you can trade directly on TradingView. They're regulated brokerages. So take a second if you would like to support my channel. If you're looking for a new brokerage, head down to the description and find that new brokers section for you, and you can find out some great details about wonderful brokerages that are regulated and offer some great sign-up perks. Again, it's free money, so why not? Thanks very much for watching. Have a great trading day, great trading week, and we'll see you next time. If you're someone who watches my channel and you're from outside of the US, I want to tell you quickly about our top broker partner here on the channel, Eightcap. Eightcap is regulated by ASIC and SCB, and through TradingView, you can actually trade directly with your Eightcap account. They also offer very competitive spreads and commissions. They have a wonderful support system and team, and you can trade anything from Forex pairs, commodities, indices, and even some select stocks. Check out Eightcap using the link down below in the description, and there are some special sign-up perks if you use that link down below again in the description. Thanks for watching.